Hey, everybody, good afternoon, and welcome to another Insider Secrets brought to you by My Core Intentions. And I'm glad that you're here today. You know, one of the things I want to ask you is, what are you doing today? Did you start your day out intentionally? Did you get up and write down exactly what you were going to accomplish today and what your intentions were? How clear are you on your why? You know, at My Core Intentions, we really invest in our clients' future through our educational and coaching platforms, helping you create short-term cash flow and long-term wealth, teaching you how to develop a portfolio in multifamily real estate, starting with small, moving into syndications. And that's what we're going to talk about with our guest today. You know, if you're looking for some directions about your business career, your investing career, your property management, give us a call. Let's see if we can maybe balance you out a little bit and give you some nuggets that might help you on your way. You know, I'm excited about our guest today, my friend, multifamily syndicator, Fragnito. And Aaron's a real estate entrepreneur who partners with qualified investors. Aaron, why don't you say hi to our listeners real quick?
Hey, listeners, how are we doing today?
Great. Glad you're here, Aaron. You know, Aaron's been helping people successfully invest in real estate for 10 years. Aaron's a co-founder of People's Capital, which holds a $10 million portfolio outside of New Jersey, and he hosts the New Jersey Real Estate Network. He's the host of the Passive Cash Flow podcast, a licensed New Jersey realtor, and a full-time real estate investor. Aaron has completed over 250 real estate transactions, totaling more than 40 million in real estate in his career. People's Capital works with qualified investors to create passive returns through local commercial real estate. The owners of People Capital are experienced in locating discounted apartment buildings for sale in northern New Jersey and implementing a value-add strategy to create a maximum return for their silent investors. Hey, Aaron, that's a pretty impressive bio. And I know we've talked about that a couple of times, and you certainly do a lot in that part of the country. Mm-hmm. Aaron, let me ask you a question, and maybe you could tell our listeners in one word what best describes you personally and your investing strategy.
Well, boy, that's a tough one. I would say perseverance. You know, I think at the end of the day, what separates success, well, no matter what business you're in, especially real estate, though, you need to keep going, right? As Winston Churchill said, when in hell, keep going. Right. And getting started developing a real estate investment company, you need to keep going, right? There's no like, oh man, that didn't, that investor did not decide to invest, or this deal didn't work out. You always have to keep going, looking at the next opportunity, building the next relationship. And if you quit, then you're definitely not going to get to where you want to be.
Yeah. You know, it's that one word sometimes that really describes who we are at the core. You know, perseverance. I love that word. And I say, you know, this is probably my 30th episode doing podcasts for this show. Mm-hmm. And, you know, it's interesting to me that everybody I have on, I ask that question and they all have a different word. It's something different. Mm-hmm. Mm-hmm. What equates to me for perseverance is years ago, I remember a guy told me, he said, man, are you tenacious? And I had no idea what that word meant. I had to go look up in the dictionary, you know, but really the same thing, right? Mm-hmm, we just keep going, and you have to keep going. And that's what I like about you and your story, mm-hmm. is how much you have persevered and kept going. Aaron, why don't you tell us and tell the listeners about your backstory and how you wound up getting involved in real estate?
Sure. So, I was graduating college around 2010 with an entrepreneurial degree at Rowan University and really didn't have any idea what I wanted to do with my life. But I read Rich Dad, Poor Dad, and I recognized my passion for real estate. So I got a real estate license and I started as a realtor, and I made about $500 in my first 6 months of selling houses. It was a really hard time to sell houses. It was a difficult way, but it was a good way to get started and meet people and learn the industry. And eventually I started doing well with that and learned short sales, distressed properties during 2010 to 2012 or so. And that's the time I met Seth Martinez, my business partner. And we realized we work really well together. His strengths complement my weaknesses and vice versa. So he's very good at operations, management, underwriting properties, where I'm better at marketing, branding, finding the deals as well, but also raising capital and working with investors. So he's really good on the operations side. I'm quite a people person. So, both sides of business are extremely important. And we worked well together. He had exited a business where he had some capital. I didn't have much capital, but I had the hustle and the deals coming in as well. And together we started buying, renovating, and refinancing multifamily properties. Started small and grew big from there, raised capital, developed our own management company, and built about a 100-unit portfolio over time.
Interesting. Hustle, boy, that seems to be the hot word these days. We used to just call it work ethic, but now it's hustle, right?
Well, yeah. I mean, I feel the difference between work ethic and hustle, right? So I'm working on completing a project right now for our marketing. And it's like, it was, 7 o'clock or 6 o'clock the other day. I'm like, well, if I didn't own the business, I would just be going home, but we need to get this project done. So we're going to stay and get it done, and that's hustle, right?
Yeah, exactly. That makes the difference.
Mm-hmm.
Tell me about that entrepreneurial degree. So that's an interesting, degree to go to school and get.
It was really interesting. I really enjoyed it. I learned a lot about what a franchise was and a debit and a credit. And, I read in a book how to manage a business. And I got to say, though, at the end of the 4-year degree, $80,000 later, I don't know if I knew a whole lot more about being an entrepreneur. I knew how to show up on time. I knew how to make myself work for free, how to study. I did an internship where I learned, a lot of things and didn't get paid at all for them, so which is part of being an entrepreneur, is working hard and not always getting a check at the end of the day. And you have to have that mindset. So, entrepreneurship, I always kind of joke, yes, I have a degree in it, but then the next word out of my mouth is you really can't learn how to be an entrepreneur in school. It's a bit of an acquired taste. You're kind of born to just want that constant grind, that constant stress of always trying to reach the next thing, but also being completely responsible for everything almost, not everything, but at the end of the day, everything. Yeah. So, it's an acquired taste. And I learned so much more in a given day of managing my investment firm than I did probably from 4 years of school. But listen, college was a good experience for me. I learned a lot of things.
Boy, isn't it interesting how, I think there's a difference between being an entrepreneur and being an entrepreneur. I believe I'm a serial entrepreneur. I've been in business for myself since I was 23 years old when I opened my first business. I'm pretty much unemployable. I don't think I could get hired by anybody because I have my own set of values, my own way of wanting to do things. And that's kind of what we try to instill in other people is how to be better and do that better. I think that's great that you went to school and got that degree like that. Along the way, what do you think was a defining moment for you, though, to make a shift and to go into real estate?
Boy, it's hard to say. I mean, definitely reading the book Rich Dad Poor Dad at my senior year of college was a game changer. My roommate gave me the book and it completely changed my life. The funny thing was, I don't think he actually read it. And he's like, this is a good book. I just heard it. So, but I also, my father owned a condo when I was younger and we would go and paint it between turnovers. And I always wanted to own a big establishment like that, a big complex. And I didn't really know how it was done, but I always had a passion for that. And my father would always say the best investment I ever made was the real estate. I should have bought more. And so I always remember him saying that. So, those things kind of lined up. And then I read the book and I was also at a crossroads. I didn't know what I wanted to do with my life. I had a landscaping business. I had a painting business. I had this 4-year degree I was wrapping up. I knew I wanted to be something of value, get back to the community, build wealth as well. I went to my college advisor and he said, well, listen, if you get a job at Enterprise Rent-A-Car, they'll start you at $32,000 a year and give you full benefits. And it's 2009, bucko. There's not a whole lot of options right now. So, he said, you should do that. And maybe over time you could eventually own your own franchise or something like that. And, he wasn't wrong. Maybe I would own my own franchise by now. Maybe I'd be a multi-millionaire as well. But, the bottom line is I didn't have a passion for that. And I remember I went to a job fair. And in 2009, job fairs were like empty. So there was a bunch of insurance companies and they're like, you can work for free for us. And, I just didn't have a passion to sell insurance. And I said, you know what, if I'm going to work for free, I'm going to work for free and sell something I have a passion for. So I started as a realtor and sold real estate where you're working for free.
Yeah, interesting. I like the way sometimes people try to or define your life or your life strategy, the path that you're going to go down, right? Hey, go to work at Enterprise Rent a Car.
Mhm.
You know, and it's interesting because you certainly didn't want to go to work at Enterprise Rent a Car. You wanted to do something else, which you have successfully done, right?
Sure. And what made me laugh was that I just paid, $80,000, $100,000 for a degree in how to start your own business. And the college advisor said, go, work for someone else.
Yeah.
Now that if you're starting a business in an industry, it's not a bad idea to actually work for someone else and learn that industry. Looking back, some of the best brokers I had were great. Some of the best investors I worked with were great. I learned from these people and I wouldn't be where I am without them. I also had some bad brokers. I knew some bad investors and I learned what not to do, right? Which is equally as important. And, but really looking back, you cannot work for someone for too long or you'll get comfortable and then you have kids and then you can't quit and you can't, so I am glad I just kind of jumped right into real estate. I didn't, I had $5,000 my grandpa gave me in bonds. I could live at home with my parents. I was 22 years old, so I had those advantages. And it was great. I learned so much.
Yeah.
Mhm.
Yeah, good for you. So here's what I want you to talk a little bit about. Tell us about your real estate sales path and that piece of your world and how that relates to everything that you're doing.
Sure. Well, sales is arguably one of the most important parts of the business. I don't want to say the most important because I would insult my operations partner, but operations are very important. But sales, listen, if you don't have a customer, doesn't matter how good your operations are, no one's paying you, then the money's not coming in, right? So sales is everything. I mean, I think if I could give some tips to entrepreneurial degrees, they should have classes in sales. I don't know why I didn't have to take any class in sales. Probably because sales is viewed almost like the bottom of the totem pole, kind of. No one likes getting those annoying sales calls, me included. But sales is so important. And guess what? Less and less people are good salesmen, right? Me included. It's hard to be a good salesman. Like I used to sell real estate as a realtor. Now I'm selling high-level investment opportunities. That's a completely different sell. It's like, being a shoe salesman at Macy's to go into like selling Ferraris and using the same pitch. You can't. You have to relearn everything. Right. So sales is hard. Who's the person across from you that you're talking to? That could change your entire tone, the words you use, the way you explain your product. So without sales, your business will fail. There's no doubt about it. You can outsource sales. You can outsource anything in business. But, the truth is the passion you have for your product will come out if you're a good salesperson and if you hone that craft. And I really think sales should be required in any business degree or, anything like that. And I was surprised. I had to take a business in logistics and learn how like factory logistics works. It was really confusing. I had to learn calculus level 2, but I didn't have to learn sales. And man, could I have used a course in sales,
It's funny how we use sales skills in everything. And people who even say I'm not a salesperson, they really are, because you have to sell somebody on something. You got to sell your kid on, you got to sell your son or your daughter to do their homework.
Mm-hmm.
You have to sell your wife on something.
Everything.
Right.
No matter what it is, you got to sell her.
So, becomes you over time, you become a skillful negotiator, maybe as a better term, right?
You learn how to win people, win the room. It comes out everywhere, when you need to make friends or things like that, or walk into a dinner party. If you're a good salesman, that's all a lot easier.
Yeah, for sure. So, how did you make the transition from real estate, single home sales as a real estate agent into the multifamily arena?
Well, my passion was always to own multifamily real estate. Before I got started in real estate, I actually moved out to Colorado for 6 months and I taught kids how to ski. So after my senior year of college, I had read Rich Dad Poor Dad, but I wasn't really sold completely on it, right? And I said, okay, let me learn more about this industry. I know nothing about it. I have no money. So let me learn more about it. So I read David Lindahl, I read Trump University books, and they made it all sound so easy to get into real estate. I lived in Colorado. I was a ski instructor. It was a great experience. And I educated myself. I went on LoopNet and started researching properties and just trying to gobble up as much information as I could. And my passion was always to own real estate. So I wrote a list and I put it on the wall. And I said, okay, in 10 years, I want to have $1 million net worth of real estate and $100,000 of passive income from real estate. How am I going to get there? Okay, well, first I have to raise capital, make connections, learn the industry, figure out how it all works, develop a game plan, create partnerships. And I said, okay, the first way to get started is get my real estate license. It was less than $1,000 and a 70-hour course. And boom, within 3 weeks, I had my real estate. Well, actually like 2 months. I had my real estate license and was on, hit the ground running, and, started to make commissions eventually, figured out how, eventually made some good money being a realtor. By year 3, I was making 6 figures. Being a realtor is not a bad gig, but I did feel like I was kind of at the bottom of the totem pole. And my goal was always to own income producing real estate. And I did not want to get bogged down in the day-to-day sales of being a realtor. So as soon as I made about 100 to 150,000 a year, I started developing a team, and that wasn't necessarily successful either. I kind of developed my team improperly and eventually just focused more on developing the investment side of my business. I had a lot of investors I was working with, sourcing them deals who liked me and trusted me. I said, hey guys, why don't we pool capital together and we'll buy a building together? And instead of me making a commission, I'll ownership, we'll bring you the deal. So started developing joint ventures like that, and teaming up with Seth and developing an actual company.
Interesting. You said something that I think is really important, and you said you had these goals and you had some direction of where you wanted to go, and your goals sounded like they were pretty big, right? Mm-hmm. But here's what I understood you to say was that you had real clarity on where you wanted to go. Mm-hmm. I think we can have goals, but if we're not crystal clear on why, once we really develop the why, once we understand deeply, not just, people say, because I want more money. Well, here's $1. Go away. There's more money, Mm-hmm. It's not that. It's about what that extra money will do for you. Or, time freedom, to be a little bit happier, to be able to take a trip when you want to. Once you're crystal clear on the why, the how just kind of happens. And that kind of seems like what's happened for you, right? You kind of, all of a sudden you and Seth are together, and now you're building people's capital, and things are coming together for you. So it's kind of an interesting progression how that always goes. So what was your first step into the apartment syndication business? How did you make the transition from, sales, real estate, single family sales to apartments?
Well, the first big multifamily or decent sized multifamily we bought was a 6-family building that Seth and I found from a We Buy Houses signs I used to staple onto telephone poles. And those used to work really well back in like 2012. And so
the old bandit sign.
Yep, the old bandit sign. Those just get the phone ringing. That's how I got my first listings. I got like a dozen listings that way. I would do short sales. And anyway, so the first deal we got was 6-family. We bought it for $220. We put like about 70 or 80,000 into it. It appraised for much more than we bought it for. We were able to refinance all of our money back out and recycle and move on to the next one and raise more capital. Then we bought a 25 unit. That was my first real syndication, where we actually raised a lot of outside capital. Like 95% of the capital was outside capital from passive investors, and bought a 25 unit, learned a lot along the way, sold it 2.5 years later for a good profit, ahead of target. And we said, by that time we were flipping a few dozen houses. We were all these projects, we were wholesaling, multiple properties per month. And we were saying, wait a minute, we just bought and sold a 25 unit over 2.5 year period. We made a lot of mistakes. We developed our own management company in the process because we had to fire 2 management companies that were not making the cut. And so now we have our own management company. We've recognized, wait a minute, we made all these mistakes with this 25 unit fix and flip and resale and reposition, and we still made a really good profit. In fact, we did better than we projected, and our investors are very happy. So that shows me that apartment buildings are more forgiving than flicks and flips. They're more sustainable than a wholesale or a realtor commission. One of the things I hate about being a realtor was you'd work so hard on a closing and finally would happen. And by the time you had the check in your bank account, you were working on the next deal already. And you're like, oh yeah, that deal, I completely forgot about that. So you're only as good as your last deal. Now with apartment buildings, you're buying and you're looking at long-term, you're bringing in capital from outside investors. So you have certain responsibilities long-term that our management company oversees. So, it's really, it was an aha moment where we said, wait a minute, we're doing all these hard fix and flips, and fix and flips are tough. You got to be at the project. Your contractors are good for 6 months and they just stop showing up one day. And you're like, what? Contractors, boy. So, we realized, wait a minute, it's actually easier to make money repositioning apartment buildings. It's more sustainable. It's longer term. You're not pulling your hair out. It's more predictable and consistent. So we pivoted around 2017 or so, 2018, to really double down on raising capital from long-term passive investors and buying stuff like you see behind me here.
You talk about contractors, right? And you're in a business where you still need contractors, but I remember when I was in the construction business and if I was pouring concrete on Friday morning, payday was on Thursday. And if I was pouring concrete on Friday morning, I wouldn't pay my guys on Thursday night because I'd have to go pull them out of the tavern the next day. And that was never fun. That was never a fun job. And I used to get so mad when I wouldn't pay them on Thursday. But I'd say, well, I won't see you guys till Monday then,
Yeah, right.
Contractors are always a good group of guys to work with,
It's all right. You don't have to do that. Listen, I've worked with lots of contractors. We've done dozens of projects, big, small, and we have our core group of contractors now. And I always say, when you find a really good contractor, don't tell anyone about them because they're priceless. And if you have a good contractor, you really shouldn't refer them to anyone, because one time I referred a good contractor to a guy and he burned his house down. So,
The contractor did?
Yeah, the contractor did. I was like, oops, sorry about that one. So I learned my lesson there. Don't refer contractors to people.
Well, I hope he was putting in a fireplace or something.
Oh my gosh. They put in a light and they left it in for the night. And it was just, so.
Oh my goodness.
Happens,
that's
man.
funny, actually.
Mm-hmm.
Yeah, I used to be a contractor.
It's a tough business. If you're GCing, you got your subs, you got the owner who's, you're kind of between a rock and a hard place, and I get it. The projects are unpredictable often, especially with old buildings, and you got to kind of, be fair to your contractors. But boy, I've also had them just really pull a fast one and trick you. Yeah.
Hey, so talk about your transition a little bit. So that first one you did was a 6-unit. How many deals have you done? And what's your progression been?
Sure. So Seth and I did a lot of fix and flips and smaller multifamilies, like 6 units and less. And it took a while for us to figure out that you're better off buying more units under one roof. So, I've done over 250 transactions or so with Seth, and those include multifamily, single family, some wholesale, some apartment buildings. But around 2018, we really doubled down on the apartment buildings. We cut contractors from our payroll and recognized everyone should be an independent contractor. So we have kind of cut the fat, cut the pork a little bit, tightened up our systems, our management system, made it into a repositioning company, not just a management company that calls a plumber when a pipe leaks and collects the rent, but takes a mismanaged building, takes a 0, turns into a hero, and class C into a B. So, and we've doubled down on that. Since then, we've done 4 syndications over the last 2 years. We started small. You can syndicate a 6-unit property. I did that. I brought in an investor and, we syndicated it. Doesn't mean you need a whole PPM for $30,000. You can have an in-depth operating agreement, talk to your SEC attorney, but there's ways to avoid that. And we bought a 14-unit for about $2 million. That's going well. We bought another 11-unit just over the summer. That's ahead of schedule. And we're buying a 25-unit as well right now. That's going very nicely. We've got the COVID discount going. Yeah. And so that's exciting. And, it's a nice, the 25 unit we bought and we sold went very well. And then we've just done dozens of smaller multis, which we would package together and, buy them, renovate them, lease them out and refinance. We did that for many years and we own a lot of those.
So listeners, I really want you to get a clear idea of what Aaron's talking about, and, that you can build a substantial portfolio with small multifamily property, that you can start to create wealth for yourself, There's that short-term cash flow and that long-term wealth piece that over time, and you make that transition. That first building he bought was a 6 unit, and we grown from there. So, when you start to, and I always tell people, Aaron, that it's not any more difficult to close a 20 unit than it is to close a 6 unit. And it's not
if you have the money, right?
Yeah. But I mean, the process is still the same. The work
Right.
is still the same. All the effort is still the same. So,
Mhm.
how should investors get involved in the multifamily space today? So I'm an investor looking to make a transition from small single families or small multifamilies. How do we make that transition into the larger product?
So that's probably why real estate syndications exist, is because most investors don't have $1 million in cash to put into an investment. But if you want to buy any, and bigger is better in real estate. So a 25 unit or 50 unit or 100 unit, it makes better cash flow. It's more forgiving with vacancies and repairs, and tends to cash flow much better than my 2s and my 3s. Where in a 2-family, if you lose a tenant, you lose half your income, or if a boiler breaks, you can lose $5,000 in profit, which might be 2 years of income. So it's easier to cash flow on bigger buildings. So what we realized there was, oh shoot, I lost my train of thought. What was that question one more time?
You were talking about the transition.
Okay, transition.
Yeah,
So right. So the reason syndications exist is sorry, got a lot of things going on. The reason they exist is because we pool the capital together. We buy a bigger building, right? And that is very hot these days. There's lots of real estate syndications out there. Most of them will pool capital in areas like New Jersey, New York, or on the coast where there's lots of capital and wealth, and then buy a property in an emerging market, 5 or 6 states away. And there's nothing wrong with that, right? They'll hire a third-party management company and hope that, the project goes according to plan. We recognized challenges with that when we hired a third-party management company in South Jersey for a property we were repositioning, our first reposition. We found a lot of challenges with that. So then we ended up developing our own and saying, let's buy local. We know this North Jersey market very well. There's so much inventory here. There's so much options here if you know the right people. And people like investing in local real estate. They can go check out. They don't have to, but it's fun being able to drive by a building and say, hey, I own 10% of that, and that's nice, So the syndication is there. The real estate syndication industry exists to allow people to get started with big multifamily real estate, which ideally is going to produce better cash flow than you're getting from your 2s or your 3s. Now, there is a benefit to owning 100% of a 2 or a 3 family. There's some pride to that. Maybe you want to experience property management. Maybe you have a property down the street you always had your eyes on. Sure. But if you're busy, working 9 to 5, you're creating a decent income, and you're not a full-time real estate investor, then I really don't, it's up to you, but I really don't suggest buying a property and being the property manager. And now you're getting phone calls. I did all that. It's tough. Even with just my first 5 unit I started with, I was the manager of it. And here I am trying to do a real estate team, look at other properties, and I'm getting, I'm going to plunge a toilet. It's like, what's the best use of your time? So, if you want that experience, go for it. Real estate's all around us, but a real estate syndication is when you invest in professionals who run the operations, from A to Z, and you can invest generally a small amount, like $30,000 or something like that. There's even websites now you can invest like $1,000 or $500, which are interesting as well.
Right. Yeah. There's a small little mutual fund type opportunities where you can, where your money's a little bit more liquid than your traditional type of real estate investing. It's leverage is interesting, right? Because you said it. You said, not everybody's got $1 million, but we can go get it, right?
Mm-hmm.
I always teach people, if you have a good deal, the money will show up. It's other people's money, right? So,
yeah. Mm-hmm.
What you mentioned something interesting. You mentioned emerging markets. So explain to our listeners what exactly is an emerging market and how that fits into your perspective as far as that's what you look for, and where is an emerging market today?
Sure. So we focus on emerging markets in North Jersey. Now, there's so many different cities and areas in North Jersey that if you know what you're doing, for example, we're investing heavily in Paterson, New Jersey right now, because that's the best bang for your buck in North Jersey. You get the most real estate and the most cash flow for the least amount of investment. And it allows you to commute to Manhattan in less than an hour. So right there is an emerging market in North Jersey. Now, you can go wider than that. You can say, well, I read that Cincinnati's an emerging market, or, Buffalo, or there's parts of Texas, right? So there's markets where ideally the cost of living is below a certain threshold. I think it's something like 30% or so, where there's different ways to estimate, how much more can the cost of living grow before it's gotten to a point where it's kind of tapped out. We look at Hoboken and Jersey City and certain cities in New Jersey where, yes, it's tapped out. Your rent growth kind of isn't looking like it can go a whole lot higher. So you want to steer away from those cities for the most part and focus on cities where rent is below market value and the cost of living is below other cities in comparison. And ideally, the expectation is the cost of living has room to grow in that area. But you don't want to just base it on that, and buy in the middle of nowhere. You want to also recognize that, quite frankly, I always say you can make money in any market as long as you know what you're doing, right? It's really about the operators.
Yeah, right.
So, but emerging markets are a pretty hot trend, but I wouldn't go chasing them either. Don't jump on an airplane because you read a CNBC article about, Miami or something, and now you're flying to Miami and to buy real estate,
Right. Hey, how do you determine a good syndicator, a good place to do a passive real estate investing? How do you pick one?
Well, first of all, what's their track record, right? In the past, have they done what they said they were going to do, or did they hit above their targets or below their targets, right? So that's the first thing you want to ask. And, also, what's your overall strategy, right? Why do you get up in the morning? Why do you do this? Why are you looking at hundreds of properties to bring us one cherry pick property and go raise all the money and deal with the 10 no's to get a yes, So, well, it's, you have a passion for it. Do you have a plan? What's your track record? And do you have people in place also that are good, right? So I'm not the one taking the phone calls. I'm not the one underwriting every single deal that comes in the door. I'm completely focused on social media, marketing, branding, raising capital. And that's what I do day in and day out. But the people in my business that do these things, they're amazing. And I don't think I could do what they do. My property manager, I know for a fact, I could not do her job.
Uh-huh.
The amount of patience and how thankless good property management is just mind-boggling. So, it took years to develop that. And, so are those people in place? Are those systems in place? Right? We use AppFolio. It's a good technology, so, do you have those systems in place so that the tenants can pay their rent in a lot of places? Can they go right online and put in a service call? Is it the professional system in place, or, are we just rolling the dice in an emerging market and hiring a third-party management company and hoping they do the job right? What I found was a lot of times third-party management companies did not treat your real estate like you wanted it to be treated. Never treat your baby right the way you want to treat your baby. So, and we found that. So, we did recognize that sometimes to do something right, you have to do it yourself, but that's not necessarily everyone's path.
Yeah, for sure.
Mm-hmm.
So what's people's capital's goals for the next 3, 5, 10 years? Where do you guys see yourself?
Over the next 5 years, we do want to acquire a $50 million portfolio in New Jersey and other parts of rural Northeast that we're breaking into short-term leasing right now, which is super hot. So we're seeing a lot of development there, and that's exciting. That's the forefront of our business. But over the next 3 years, we want to develop our short-term leasing holdings. We want to develop our apartment building holdings in North Jersey. We want to improve our systems even more. Then in the 10-year plan is to, really, we're going to be doing a lot of 1031 tax deferences probably around that time and trading into bigger buildings. So a lot of reasons our investors like us is because we have multiple exit options, but also the option to not exit, which is pretty unheard of actually in the syndication space. So we buy these properties long-term, and we plan on doing a 1031 tax deference between the 10 to 15 year mark, usually when you exhaust all the tax depreciation that we try to front load. So for the most part, that's what we'll be doing at that time. And by that time, our investors will have made back their entire investment plus some on the investments. We'll be selling the buildings using a 1031 tax deference to, escrow the monies and move into a bigger building. And these investors are going to then own a share of an even bigger building, which offers more cash flow and better tax appreciation and rinse and repeat.
Yeah, interesting. Good for you. So what advice would you give a new investor today?
Whew, what advice would I give a new investor today? Well, it really depends what you're trying to do, what your goals are, what's realistic, how much capital do you have to invest, how much time do you have? Most of the people I talk to are working full time, they have a family, they have a job, they're good at what they do, and they make a good income doing it. If that's the case, don't quit your job and become a realtor because, Aaron made it as real. If you're good at something, you're making an income doing it and you enjoy doing it, then you've cracked the code, keep doing that. But real estate is an asset class that is what you need to diversify out of the stock market. Don't take all your money out of the stock. We suggest probably half of your investment should be in real estate. I don't mean a REIT. That's a stock that just goes up and down with the stock market, but is backed by real estate. I mean, actual real estate, whether that's buying the 3-family down the block and trying out property management or investing in a syndication like People's Capital Group and getting the updates and the financials and learning from that first and earning from that as well, find the right fit for you. But I'm not one of these guys that says, it's real estate or the highway. Real estate's one way to make income. But if you're good at something and you enjoy doing it, you're making good income doing that, then look at real estate as a passive investment, not active.
And that whole explanation goes back to your why and being crystal clear on what you want to do, what you want to accomplish in your life. Hey, thanks for that. Listen, on a lighter note, let me ask you a couple of questions. Favorite book you've ever read?
Boy, I guess I'd have to say Rich Dad, Poor Dad, because it completely transitioned my life. And,
I wanted to see.
I saw my little brother reading it the other day. I gave it to him like years ago, and he finally picked it up off the shelf and started reading it and really put a smile on my face. So, definitely probably my favorite book, I guess.
Nice. So I know you're up there in New Jersey. Favorite tourist attraction?
Well, boy, I like to go to baseball games, so, I've been to Yankees and Mets games, but I like to go, when I go to a city, I like to go to a baseball game. Now, you can't really do that these days, but my wife and I take these awesome road trips and go to the baseball stadiums and baseball games in each city, which is a lot of fun to do in the summertime. So that's my favorite tourist attraction.
Kind of depressing this year, though. I love baseball too. And, I would turn a game on and I go, I can't watch this. Nobody's there, it's.
Yeah. And, there's nothing like going to a game, especially if you haven't been to a city and you roll into the city and go to the game, like I've been to Detroit and all these beautiful, Boston, a lot of great stadiums and it's sad.
Yeah. One more. How about favorite restaurant?
Favorite restaurant? Let's see. Can I say Wendy's or? Maybe I'm just hungry. No, I don't know. I honestly like going to new restaurants.
Okay.
So, I like to support kind of smaller local restaurants, but also like checking out new restaurants. So, I'm gonna take a pass on that. Maybe I'll just say Wendy's.
Okay. How about the most memorable moment in the last 6 months for you?
Ooh, most memorable moment in the last 6 months for me. Excellent question. Well, let's see. I got married a year ago, so passed that test. But I would say this whole thing. I remember we were doing a networking event. We used to do networking events in our office. We packed the house. It would be standing room only. And we had an event for March 1st, or was it March 2nd, like beginning of March, and no one showed up, right? We had a full booking online and it looked really good. And then no one showed up. It was really weird. And we're like, what the heck is going on? What the heck is going on? And I go home with all the food from the event because no one came. So I had all this extra food and I was like, honey, at least we got a lot of food. And she's like, no, did you hear on the news? There's like some virus going around or something. And no one showed up. I'm like, what is some virus? What the heck? Are you kidding me? A virus? That's why people don't show up? Come on. And man, about 2 weeks later, we were having some really serious conversations and had to put some things on hold and pivot the business as well. And so that was a really tough time. Yeah.
Yeah. It's been an interesting 6 months. That's for sure.
Mm-hmm.
So Aaron, tell our listeners how they get a hold of you if they have any questions or want to talk syndication with you.
Sure. So our website is peoplescapitalgroup.com. And that's the best way to get in touch with us. We have a podcast there, the Passive Cash Flow Podcast, which you can also find on YouTube, People's Capital Group on YouTube. So I try to put out a lot of content there, and you can check out some syndications we're working on, even fill out an application to qualify to learn more about our next private offering.
Nice. Good.
Mm-hmm.
All right. And we'll have your information on our website also. And I want to thank everybody for listening in this afternoon and for being here. Aaron, I want to thank you. Your time's been valuable, and I appreciate that. Remember, like this, go to YouTube. I always forget. Go to YouTube, like this, subscribe. Come back next Tuesday. Who knows who we'll have next Tuesday? And, enjoy this. If you have questions on your investing strategy, if you have questions on where you're headed as an investor, go to my website, download the free coaching stuff. Let's see what we can do to help you. Aaron, you want to say goodbye?
Goodbye, Mike. Thank you so much for your time. I had a great time. My website one more time, peoplescapitalgroup.com. Have a good day.
Thank you. Look forward to seeing you all next week. Take care.